Hi, this is Sive Morten with the daily update on EUR+. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's take a look again on euro currency. So yes, there was a lot of action with the special European Central Bank meeting concerning the rising of the default spreads on the high indebted countries, Greece, Italy, and some others, retail sales once again, and of course the Fed meeting. So as you can see, our suggestion was mostly correct, as we said that it might be already pricing in process of the 75 basis point move, is because just using the common sense, the recent sell-off can't be triggered by expectation of the 50 basis point change. So it's too strong. And as a result, as you can see, almost no reaction on the market on the announcement of the Fed meeting. So in the weekly report, we of course will take a look at the fundamental component of this decision. We see that in the FPA, we see that this is bad decision by two moments. First of all, it's simply speaking, Fed tells you that currently we crush the stock market and Bitcoin and other sources of the liquidity, drying the liquidity out to the bond market, and then we're once again probably switch on the printing machine. It's just because on the mortgage, on the real estate markets, it's a really difficult situation, and it's as we said, you could forget about the stock market, you could forget about everything, because the crash starts from the bond market as a major the foundation of the whole economy. So that's actually what could happen, and we do not see that Fed have enough courage to resolve the problem of the inflation. So the first signs of the slowdown of the economy could switch the pedal and start printing money again. So on the European Central Bank situation stands even worse. It's just because if Fed is doing already something, at least they have rising rate. But once European Central Bank just announced possible tightening of the policy, of the closing quantitative easing program, starting interest rate rising, the default spreads have jumped drastically. And they are just scared, actually, guys. They are scaring. Because this is a really big hazard for the domestic national debt market. It might be default. So if they do nothing, it might be default. That's why they even yet to change the rate. They already switched the back pedal. Lagarde said, well, we will be very gentle. We think that we will provide some support and so on. It means only one thing, that we keep buying bonds of the highly indebted countries, providing once again liquidity. In such circumstances, you could forget about controlling the inflation. This will be two-digit and keep going higher, especially with the background of the hydrocarbon situation, as you understand. That's why if on other markets we could see some bounce or something, on the euro currency, the chances for that looks really anemic. Yes, we have some sideways action. It's because market just taking a rest after Fed decision. But this is temporal stop, and we suggest that market just should keep going lower. Maybe not this week, but on the next week. Currently, across the board, we do not have clear directional patterns for direct trading, except maybe Great British Pound. But overall common situation suggests that the downward action seems more probable, and we're still searching and watching for 97.50 target first. Next target always 95. So euro currency appears below the parity very soon. So on the 4-hour time frame chart, we just see sideways consolidation with the megaphone pattern. Maybe later it will turn to some kind of the diamond or something of that sort. But I'm a bit skeptical on the possible upward continuation and higher retracement, because market actually has completed the predefined level that we said. It's around 105 area. It's confluence, and probably if you have taken the short position here, you currently could move stops to break even and just see what will happen. For the other traders, well, currently we do not have clear bearish pattern inside of it, so if you haven't taken a position right there, you of course could try to do this, but your stop would be too far probably, and well, it's not as comfortable as taking the position right there around it. So, but anyway, if you decide to take the position, you will have to place stop somewhere above the same confidence area, suggesting that your currency really could keep going lower in the nearest time. So that's what we have on the euro. On the hourly chart, we do not have yet any clear bullish patterns as well. So in general, this is some kind of the double repo pattern that hits the 50% level that we discussed recently. But that's all that has happened actually. Market collapsed down. So on the other markets, so take a look at the interest rates performance, the bounce that we have discussed taking place right now. So market is bouncing down from the major XOP, the interest rate dropping. It's just reaction on the Fed, the traders who were possessing for anticipation of 75 basis point move. Now it's just booking profit. This triggers minor pullback, but it's very temporal. We suggest that later market will keep going higher. And the same we could see and say about Bitcoin. I will show you in today's video later. Today we also will prepare the Bitcoin update. And on the Great British Pound, here XOP completed market has formed bullish engulfing pattern, right? So those of you who are trading on the intraday charts, who make the scalp trading, you theoretically could consider taking some minor, maybe bullish position based on this pattern with a bit deeper retracement. Because on the hourly chart, you could recognize that it might be some kind of the head and shoulders to form, right? So it might be left shoulder, head, and right shoulder. Concerning the bottom of the right shoulder, where you could consider taking the long position, I would suggest that it should be the 618 support of this action. Just because on the 4-hour time frame chart, recall what we said. We actually have planned to trade bread and butter here, and this bread and butter setup stands in place. So it's a bit longer. I mean, in terms of the number of bars to complete the reach the level. We usually Jordan suggest it should be 3 bars above the 3x3. Here we have 4 bars. But anyway, the nature and market mechanics of this pattern stands the same. We have strong downward action, first pullback, which means after that should be deep retracement. It's approximately 618 support. So if you intend to consider possibly taking long position with some hand shoulders on the 4-hour time frame chart, probably it would be better to not consider it until market hits the 618 support of the whole upward action here. That's just common sense, some suggestion. Speaking about the bread and butter trade, you could consider taking the scalp short position, maybe even keep it longer. As we said, this market could keep going lower because here, guys, well, it might be just downward continuation here, and the market could not stop at the 618 support and starting from the hand shoulders. Otherwise, here hand shoulders could fail, right? So just when you're taking, for example, position on bread and butter, move stops to the break even and see what will happen around 618. For a stop placing, it would be better to place it above this area, slightly above the stop. So because market theoretically still could complete this ABCD pattern, which has the target 2216, and only after that the major bread and butter could start. Chances exist. I'm not sure this definitely happened, but we have minor OP target that has not been completed. So if you would like to take the short position, it would be better to place stop above this area. So that's what we have from the Great British Pound. As you can see, not a lot of for trading today. Market also is a bit tired from the recent tension because yesterday was a really difficult session for trading and psychologically for the markets. That's what we have currently. Whatever will happen, if even we will get this head and shoulders for the deep retracement and pullback on the euro currency, although here the chances stands very small this will happen, that will not change the overall trend. This will be just tactical consolidation before downside continuation, because direction here is set to the downside. And all the stuff that we have currently and discussing right now, this is for tactical trading, short-term scalp intraday trading, and maybe for taking the better positions if you would like to join the major trend. That's all.